Welcome to an Economic and Management Sciences video brought to you by Simplifying School. In this video, we will look at the effect of cash transactions on the accounting equation as covered in the grade 9 syllabus in South Africa. You might have heard about the accounting equation, and that is that assets is equal to owner's equity plus liabilities. Let's see how assets can be affected. You'll have a negative effect on assets when you spend cash or get rid of another type of asset. You will have a positive effect on your assets if you receive cash or some kind of money, or when you add a new asset. Let's look at examples. When you buy a pen, your assets will decrease or there would be a negative effect on your assets because you are losing money. Money is an asset. So you are giving out money, therefore your assets would decrease by the amount of the cost of the pen, usually coming from your bank account when you work with business aspects, or your petty cash. Both are assets, so both would be negative. When you buy a car, your assets would both increase and decrease. It would decrease by the cost of the car, your money part of your assets, but your vehicles part of your assets would increase by the cost of the car. So you will have two entries there under assets, one for probably bank and one for vehicles. Both would have the same amount, but the one where the cash is flowing out would be negative, and the one where the vehicle is flowing in would be positive. When you pay back a loan, there would be a negative effect on assets with the amount that you pay back. When you receive interest income, your bank account would be increasing by the amount of the interest. So therefore your assets would increase by the interest amount. When you sell stock or merchandise or trading stock, whatever you want to call it, you're going to have 4 entries, but 2 of them would be assets. We'll look at the others later on when we get to owner's equity. So the 2 assets effects would be your stock, your trading stock, your merchandise, which would decrease by the cost price of the stock. Now think of it like this. You've got your storeroom there at the back. Customer walks in and say they want to buy, let's say, 100 of a certain item. They take that, and that is no longer in your storeroom or in your shop at the front. So therefore, your asset, your stock, would be less by the cost price of the stock. But your bank account, the money that's coming into your till, into your account, into your possession, that would be a positive effect with the selling price of the stock. We will later on look at the other half of the transaction, but that would be owner's equity entries. When a debtor pays you, there would also be 2 effects on assets. Remember, debtors are assets. So therefore, the amount the debtor owes you is becoming less by the amount that he pays you, he or she pays you. Therefore, debtors would decrease by that amount, and the overall effect of that part of the transaction would be negative on assets. But you are receiving the money from the debtor. Therefore, assets would be positive with the amount that the debtor pays, because it's money coming into your business, into your bank account, into your possession. When you receive a loan, assets would be positive because you are going to receive that money into usually your bank account, making your bank amount more, and therefore your assets increase. Let's look at owner's equity. There would be a negative effect on owner's equity when you have an increase in either expenses or drawings, and a positive effect when you have an increase in either income or capital. Let's look at some examples. When you buy a pen, remember we earlier spoke about buying a pen, and we looked at the assets part of it. Now we're going to look at the other part of the transaction. Remember we said when you buy a pen, your bank account or your money is going to be less with the cost of the pen. Now, owner's equity is the other part, and because it is an expense, there would also be a negative effect on owner's equity. If you want to go more in details, because you bought stationery is an expense, so therefore owner's equity will have a negative effect by the cost of the pen, the amount of the cost of the pen. When you make drawings, or the owner makes drawings, if you're not the owner, then we already looked at one part where the assets would become less, because you're either going to withdraw cash, so your assets become less, or you're going to withdraw some other type of asset, like maybe trading stock, maybe a vehicle or land or buildings or whatever you're going to withdraw. So that would mean that the assets is decreasing, but the other part of the transaction means the drawings is increasing, and therefore it would also be a negative effect on owner's equity. If you receive interest income, it is an income, so the effect on the owner's equity would be positive by the interest amount. You could also think back to assets. What would happen with assets? Assets would increase because the amount of interest is coming into your bank account, and therefore it's a positive effect on assets. Then, if the owner makes a capital contribution, that could be either money or maybe land and buildings or vehicle or some kind of equipment, that would make your assets more. It would also make your owner's equity more because it's a capital contribution. Let's look at liabilities. There will be a negative effect on liabilities when you pay back any money that you owe, and there will be a positive effect when you increase the amount of money that you owe. Let's look at examples. When you pay back a loan, your bank account would decrease because of the money that you're paying back. So in other words, if we think back to assets, our assets would decrease. Liabilities would also decrease because of the amount that we're paying back. We no longer owe that money, so that's why it is decreasing. If we receive a loan, on the other hand, your assets would increase because that money is coming into your bank account, if we think of assets, and liabilities is also increasing because now we have all this money that we at some stage need to pay back. The main thing to remember is that A must equal whatever is under OE plus L. So in other words, what you have on the left-hand side of your equation must always be equal to what you have on the right-hand side of your equation. Whether the one side is positive, the other side must also be positive, or whether it's negative, the other side must also be negative. If you are still unsure under what group a certain account will fall, please watch the video on how to determine into which account groups any account fall. That was uploaded about a week or two ago. Now that you know the effect of a cash transaction on the accounting equation, why not share this video with your class and subscribe to this channel for more videos covering topics you are studying.